folks, Dan Frio here, the Mortgage Update. Today is August 18th, 2020. So what's happening today in the market? Well, you might be surprised. And we had some great numbers come out from the housing market, which helped spur some of the business there. And then there were some surprising numbers. You know how every day I'm like, okay, how is the stock market doing so well with so many people unemployed? And GDP down and everything else. I got some surprising numbers for you, and I didn't even realize this. And I'm like kind of smacking myself in the head why I didn't realize this. But these numbers might be shocking to you. So let's get on to what happened today in the markets. So as you see here, we like this number. We're up 14. What we're doing is look at this. Well, here, let me explain to you why we're watching this. So for the newbies out there, thanks for tuning in. For those that watch me every day, bear with me for 30 seconds because you know what this number is and what it represents right here. But why most people follow me is they want to see, what's going on with mortgage rates. What happened today? What's the trends? Today is already history, unfortunately. But what's the trends of going forward, what it is for tomorrow, maybe by the end of the week, for the end of the month, 2 weeks, 3 weeks, 4 weeks out, months out, and so forth. So we study a lot of things here on this channel, but this is mainly what we look at because this number right here is the biggest number that impacts mortgage rates. So what this is you'll see up here it says MBS. It's mortgage-backed securities, which is a batch of mortgages that are clumped together into a bond sold out as an investment. So this number here is the price of that bond. Bond 101, basically the way bonds work is the higher you pay or the more money you pay for the bond, the lower the yield. That's what we want. We want lower yields because that means a lower mortgage rate. The yield on the bond is basically what's one of the characteristics or one of the pieces of the puzzle of your mortgage rate. So we love when this number goes up. 14 is a nice up number. Ironically, you're going to see some of these technicals that we follow down in this area here. And I'm trying to do my best, guys, with zooming in on some areas and so forth. But I'm not a techie by trade or a video editor. I'm a mortgage guy, so I try to do the best I can on this. But so let's try to focus down here on this chart. What this chart is the last quarter of what's going on with the bond MBS prices. And again, green is good. You're going to see, as these move up, rates come down. All right. So want to focus on this area over here. All these lines represent something. The top lines through here, these create ceilings that we should hit and come down if the markets are trending as they normally do in normal markets. And then down through here are some short-term and long-term floors. So we should bounce around these areas. We shouldn't spike up above them or down below them. We should trade in this range right here. You're going to see right through here last week, we had a sell-off, which mortgage rates pushed up. And I locked all of my clients that weren't locked over in these areas. I locked them right here because I anticipated, and you can go back to some of my previous videos, in a normal market, we should be trending around here. Well, that's where we are right now. Okay, so now we're focusing on the ceiling and the floor. Now, these other lines here represent some technicals as well. They're moving averages. So this one represents a 25-day moving average, a 50-day moving average, and a 100-day moving average. All right. You're see, it's kind of cool in this area here. We were hitting the ceilings and stopping, and we would hit a brick wall when we hit these ceilings. Look at that. Everyone played a key role. And we stopped. That caused me for concern, and that's why I locked everybody in. And we did perfect timing. So now we have a short-term ceiling right here. You can see we hit it here and we stopped. We hit it here and we stopped, and we hit it here and we stopped. I think we're going to find some resilience here. Like I said, unless there's some additional bad news that comes out, I don't think we're going to be back to these levels. I could be wrong. but that's why almost probably 99% of our portfolio of loans right now, people are locked in, so you don't have to worry. Did you completely miss the boat? No, because the variance between these might be, 0.25 in your rate. Nothing major, but 0.25 on a $300,000 loan, it adds up. So that's where we are, the technicals are today. All right, so let's see what happened in other parts of the market. Economic calendar for today, housing starts, blew away the numbers, blew them away. We haven't had this many housing starts since 2003. So look at that number there. Permits were way up too, which is phenomenal news. Now, back to my question that I said before. The thing that kind of was interesting to me, as I'll put it this way, is how is the stock market doing so well? How is the bond market doing so well? How is the economy? People were buying like crazy, like Amazon, record numbers. How can this be? Well, a study came out today, and it shocked me as well. Let me go through some of the data with you. From when the pandemic started, we have $680 billion in income that has been lost, in salaries that have been lost. $680 billion. Another $174 billion in other income for people that has been lost. So that's bonuses, commissions, all that other stuff. So you're talking, 6, 7, almost $800 billion. That is huge loss of income for the economy, for the United States. However, the stimulus plan. I might have ticked off some people yesterday when I said, a lot of people were off work. They're making more money off work than they would be going back to work. And I think that's the reason why we see unemployment numbers is as high as we do. Don't shoot the messenger. I'm just giving you the facts. I'm unbiased here when it comes to political pieces. I'm no conspiracy theories, no doom and gloom to get you to click something. No, I'm just giving you the facts. My facts are backed up after that. After my comment yesterday saying, I still think people are making more money staying at home than working. Well, if you got mad at me, hold tight, because the study came out and said, remember, we're at about $800 billion in income was lost. But the stimulus package pumped in $2.24 trillion in income out to people. So we had a loss of salaries and income of $800 billion, but the stimulus package pumped in $2.24 trillion. So that backs up what a lot of people are saying is people are making more money staying at home than working. Don't shoot the messenger. I'm just giving you the facts and the studies, because on my side, I'm like, how's the stock market keep going? How are people keep buying all this stuff? And it was backed up with some numbers today. So tomorrow we have the Federal Reserve minutes that are coming out. So that probably not going to play any impact on the economy or with interest rates. The 20-year, you can't see what I'm seeing right here. The FOMC minutes are coming out tomorrow. That's really going to show us really nothing that I can foresee. The 20-year bond auction is coming out. That actually, last week when it came out, that did push up rates after 1 o'clock. I think it was last Wednesday. Rates pumped up. They had a little bit of a spike up. So this can cause some, jitters in the market. And then from there on, we just basically have jobless claims and some other stuff that isn't going to affect the markets. So here's the newsletter of the day. I just posted this on my website. Home builders are on fire, which we just discussed. The bond movements is playing in line to where I thought we were going to be. Short term, I think we're going to be stable. I don't see any reason why we shouldn't really, we shouldn't stay stable. There shouldn't be any reason that rates drop any more. And also, there shouldn't be any reasons where rates go up. So I see some being stagnant right now, which is awesome. I have no complaints there. Let's go over to CNBC and let's see what their news is. Same thing as housing starts are blowing up. So, these aren't dumb people that are doing all this information or this study on home building. So if you're still renting, might be a very good time to buy. Rates are at historic lows. Incomes for people are still there, especially if you're working. You're most likely, you have been working or you're back to work, and it doesn't take a lot of money to put down to buy a house. So that is the show for today. I will be posting a little bit later this evening the rate comparison. Rate Tuesday, I try to go through. I'm going to work on today or here shortly, looking at VA refinances to see how we can help those veterans out there refinance to a lower rate and take advantage of these low rates. So if I can be of any help to you, please go to, and I'm going to take you to my website right now, how you can reach me personally. You can go to therateupdate.com. So that's therateupdate.com. You can, if you like what you see, please give me a call. You can talk to me personally right down in here. 844-775-LOAN. That's 844-775-5626. My name is Dan Frio, so if you'd like to email me, shoot me an email at D for Dan, Frio, which is Frio, at preferredrate.com. What I ask people to do is if you're in the process of getting a mortgage right now, send me a copy of what's called your loan estimate or your fee sheet. That'll give me your home address so I can pull the value of your property. That'll give me the loan amount that you've been approved for, the rate, and the fees. The fees. Don't be inundated over just wowed over completely over the rate alone. We want to see those fees and compare those. I had 3 just within the hour. I was able to, on one, match the rate but save them $2,500. Another one, I had 0.375 lower in rate, and they were charging the client $3,700, and I was at $1,300. So that was about a $2,400 swing on better fees. And then the other one was, I forget what it was, but we beat them on the rate, and the fees were the same. So all 3 of them, we either beat rate, fees, or rate and fees. So I hope you like what you see. If you do, please don't forget to give me a thumbs up. You guys have been really helping me out. We've been adding about 30 or 40 subscribers a day. I'm trying to get to 10,000 by the end of the month. We only have maybe 12 days left, so I really need your help there. Don't forget to subscribe down below. Click the bell. I try to title all my videos with a good title, so it's not like, hey, what's going on? I try to tell you what the information on the video is, so you can decide if you want to watch it or not. And but I'd like to, if you need any help with anything, please reach out. I'm here, God willing, today, tomorrow, and for the next 30 years. So you take care. Thanks again for everything. Have a great night, and I will see you later. Bye-bye.